Good morning, everybody. Welcome. We'll get started in just a minute. Good morning. Thanks, everybody, for joining us. We'll get started in just a minute. Good morning. Happy New Year. All right. Let's go ahead and jump right into it. Thanks, everybody, for joining us this morning. This is Michael coming to you from Gamma Edge on January 2nd, Friday, January 2nd, with our pre-market prep session. As always, here at Gamma Edge, we'll cover those three pillars: sentiment, structure, and trend. If you're following us on X or watching us on X or YouTube, make sure you like and subscribe and be notified when we go live with our content or when we post any content. So let's go ahead and jump right into it this morning. Obviously, New Year's Eve, we had a significant move down in the overall market, a pullback. We were discussing it in the pre-market prep throughout the week. We were seeing some weakness creep in via our market trend model. This is our full screen market trend model. Quick orientation is the bolded white line is a cumulative tick or intraday instantaneous CT. This is based on buying versus selling in the overall market. And then our colored ribbon is our longer look back period. This is how we turn our mechanical portfolios on or off. And as of now, the bolded white line, cumulative tick, obviously a significant move to the downside, cutting through the colored ribbon. So this turns our mechanical portfolios off, including our P-trans to PGX, as well as our wheel strategy. So we'll not be putting capital or risk to work in the market today until this bolded white CT starts moving back to the upside, crossing over these colored ribbons and in a more positive slope, indicating more buying in the overall market versus selling. Moving on to our market trend model, we've just released this within the past few weeks here. Again, this was indicating weakness in the overall market early on in the day on New Year's Eve, and we're below all the moving averages on both of our sources. This is ARCX, as well as good morning all, Hammer, and as well as our tick US. The ARCX is a little bit more quality tick. The tick US is including all the exchanges, so it's a little bit more sensitive. So obviously it'll move to the downside a little bit more quicker, and it'll recover a little bit more quicker also to the upside, just a little bit more sensitive. But again, we're under all these moving averages. That gives us an indication that there's a significant selling in the overall market. Even with that quick move back to the upside and recovery, it was met very quickly with more selling to the downside. So we'll watch this intently as we head into the open today. At the very least, you'd want to see this start moving back above your short-term moving averages if you're an intraday 0DT trader, as well as a 1 to 3 day trader, which is how we look at the overall moving averages to the downside. All right, let's go ahead and jump in the SPX options complex. This is largest, most notional value. Again, this is how we look to understand where market participants are positioning. We separate it with the SPXA and the SPXP. SPXA is your institutions, obviously indicated via our expiry pane over here or widget in our web app. Again, 116s turn on. So this is January monthly OPEX. And then you can see our open interest quartile, the weighting as we head into the expiry. For January, we're call dominated above below spot price. So transition levels at 68.80. So staying above the transition level puts us in a more call dominated positive gamma state. Anticipation is that we would continue to be supportive and then move to the upside towards 6,900 and then 6,950. If we get within the overall transition area, which we did on Friday, and then we're trying to recover that this morning. Again, this will be choppy price action, could lead to a little bit more weakness. We'll notice the exposures down here. down towards the 6,800 level, we'd anticipate that to be supportive and most likely stabilize the market. If we get below 67.75, then it'd be a little bit more risk off, and we'd be a little bit more cautionary on the overall pullbacks within the market. Again, looking at our market trend model and understanding if there's more selling versus buying in the overall market. So as of now, stabilizing type price action, the SPXA for institutions heading into monthly OPEX pullback should be supportive, as we've seen basically across the board the past few weeks. Staying above 68.80 will be key within the transition, choppy, and then supportive action down towards 6,800, 67.75. Below 67.75, a little bit more bearish. All right, moving on the SPXP. Again, you'll notice over here via our web app, our quartile scale. This is also clickable in our web app, so you can do the top 25%, bottom 25%, or anywhere in between that. So again, this is giving us the top 25% expiries heading into 2026. Obviously, today is a significant expiry, then heading into Monday, and then into next week. Next Friday, obviously, is a significant expiry. So as of now, with these expiries turned on, we are put dominated above and below spot price. You'll notice transition there, 68.75, 68.80. Again, above that, we'd be a little bit more bullish. A green arrow there, up towards 6,900 below this transition area. Again, we say transitions matter. Below that, you'll be in a less favorable environment for price appreciation and a pullback down towards 68.50, which we'll talk about that level in 0DT in a minute. And that's our peak X level, and then our COTMP level at 68.30. Below those, then obviously we'd be looking for a little bit more weakness down towards 6,800, which we've already talked about on the SPXA, which also matches our SPXP. So again, key area for today, 68.75, 68.80 to stay above. Pre-market, we're trying to stay above that area. All right, moving on to the SPXP GEX ratio. This is like a put call ratio, but we got a time component, which is gamma. We were discussing last week this divergence we were seeing within the overall GEX ratio. Again, I go back and watch our pre-market preps, but we were not seeing that out of the money upside speculation that was needed to keep sustained price move to the upside in the SPXP or a recovery in the SPXP. So again, this GEX ratio is short dated call gamma versus short dated put gamma. And if it's trending to the downside, then short dated put gamma is winning the overall structure or landscape. And again, this would indicate those put speculation to the downside, or you're losing the in the money call support to the downside, as well as the out of the money calls speculation to the upside is being degraded and it's being overrun by the in the money puts above spot price. So again, we're below that one level, so we give an edge to the bears at this current price, and we've seen the overall pullback in the SPXP. So we were cautionary about this, seeing the overall GEX ratio continue to decline. The out of the money call speculation was leaving the complex, and this was being overran by out of the money put speculation. So we'll see if we get a recovery today in spot price as well as GEX ratio. If we just get a recovery in spot price without the resultant GEX ratio recovery, that lets you know that it's a weak structure. Out of the money speculators are not trying to put capital at risk or money to work, and that most likely we'll see some more pullback or at least some consolidation within the overall SPXP. All right, moving on to the SPXP delta balance. Again, this is separating the left-hand plane and right-hand plane in the option structure. Your right-hand plane is the green dotted line. This is your out-of-the-money calls as well as your in-the-money puts overhead. And then the red dotted line is your in-the-money calls below spot price as well as your out-of-the-money put speculation. So sharp decline, a recovery for today, slight recovery. Again, we're not seeing that right-hand plane drive above the zero line. So out-of-the-money call speculation via market participants is really not coming into the overall structure and complex. So you need to have that for spot price appreciation. In the money calls are staying entrenched. Those are continue to be supportive. And then the delta balance is back above zero. So we give a slight edge to the overall bulls. But again, we'd like to see this right-hand plane recover fairly significantly. Now, further expiries, you'll notice at this spot price 68.83 that the left-hand plane actually weakens. That's your in the money calls below us once we get through this expiry on Friday into Monday. So again, we'd like to see that recover. You see the delta balance barely above zero, but that's due to the new out of the money speculation coming in the overall structure. So again, edge to the bulls with this, but this is not necessarily indicating for us to be significantly bullish into next week, as the left-hand plane is still very weak or very weakened state below spot price. So we'll watch this, see if this changes any heading into next Monday as we get through this Friday expiry. All right, moving on to net stack command. Again, this is gives us the highest sensitivity levels for today. So we do have in the money calls below us. These should be supportive on any pullback. I've already talked about that. That's your left-hand plane integral. So again, in the money calls entrenched. Right-hand plane, though, we are in the money put dominated here at the right-hand plane strike, even though that's 7,000. But that is a significant in the money put level overhead. Charm is going to be difficult to overcome today. You see this out of the money calls at 6,900. If we stay below 6,900, again, these will continue to grow as they limit towards -1. And then these will continue to be a headwind throughout the day. Again, out of the money puts below us, these should be supportive as they also continue to decay throughout the day. And then onto the gamma levels, high sensitivity levels, as well as Vanna. Vanna is giving us the idea that if we do see volatility drop and out of the money calls come in the complex, we could have a Vanna tailwind. Obviously, we'd need to get above 6,900 on the right-hand plane strike. So again, we'll watch this throughout the day to see via our vol-am command, which is our intraday call versus put speculation, to see if we see call speculators come into the structure, or if we see out of the money puts being speculated to the downside, as we saw on New Year's Eve. All right, moving on to the SPXP 0 DTE structure for today. Let me make sure I got the right one here. 6860 and 6850. Okay, good. I want to make sure I was in confluence with our overall game plan for today. So we are put dominated as we head into today. The structure continues to look a little bit weak, obviously, depending on where we open with spot price. If we open above 68.80, that'd be the transition. That is a confluence between GEX and DEX transition. So again, staying above that level will be key for a more positive structure for appreciation up towards 6,900. But you also notice that PGEX is at 68.80. Again, that's historically a level where we see some monetization. So we'll have to see us stay above that. And then to the downside, if we're in the transition or a drunken sailor range, we definitely could see a move down towards 68.50 fairly quickly. If we see out of the money put speculation, then below 68.50, we'd be looking for 68.30. So again, key level 68.80 really at the open. We see a wider transition. Again, that's a little bit noisy, again, indicating some uncertainty from market participants, as well as a drunken sailor range. I would look for some overall stalling at 6,900 also. You just see the significant amount of a red net delta as well as charm overhead. We've already talked about that on the net stack command. So again, that would be that area that I'd look for rejection. If we see some weakness in the market, that may be an opportunistic short for a move back down towards 68.80 and then within the overall transition area. So we'll see how this continues to play out. Let's move over to the pre-market. So we've already labeled those 68.80, 68.75, and then 6,900 to the upside. That's where I look for some stalling. We tested 68.93. If we get a bit below 68.80 at the open, I'd anticipate a little bit more weakness for a move down towards 68.75, and then below that, we'd be looking for 68.50 to the downside. So with that, thanks everybody for joining us this morning. Again, join us at gammaedge.us, and you can put in your email. You'll be delivered a newsletter over the weekend. Again, this Beyond the Bell newsletter covers our overall thesis as well as our tools. And then you can also check out our Game Edge Fast Pass. This is our flagship options course. It's all for free, so check that out. And then, as always, check out our blog, extensive education posts that go through all of our tools and how we look at the overall SPX option structure as well as individual equities. And with that, if anybody wants to go over individual equities, go ahead and throw those in the chat. I have about 5 more minutes and we can cover those. Or if you have any questions about any of the things that we covered this morning or the levels we talked about, again, 68.80 will be that key level to stay above or below heading into the open for today. So we'll see how that plays out. All right. Thanks, everybody, for joining us. Absolutely. Thank you. Again, like and subscribe on X and YouTube. You'll be notified when we go live with our content, and as well as we post individual equities throughout the day. We have an individual equities channel. Google. Yeah, let's check out Google. Yeah, so obviously everything will be 0 DTE for today since we have Friday expiry. So call dominated above and below spot price, 134,000 OI. Let's see, I don't know where Google's at. Pre-market transition area is 312.50 to 315. So you need to stay above that level. Call dominated though, not a significant upside appreciation though. So I would not look for a large move to the upside. I'd say 315 would be that stalling area that I'd be looking for on Google. Hopefully that helps. All right. Thanks everybody for joining us again. As always, manage risks today, heading into a Friday post a holiday. Maybe a little bit more volatile. Obviously, we're starting in a put dominated environment, so the moves will be accentuated, and then it's a Friday expiry. So I would say just make sure you wait for the opening range, and then we'll get some more data at the open via our vol-m command and see where market participants are looking to speculate intraday. All right. Thanks everybody.